Hello, good afternoon. You're watching Closing Trades on ET Now. I am Anisha Jain. With me is Aisha Faridi. And for now, we're holding on to that 19,100 mark on the Nifty. It's Bank Nifty which has managed to surge almost 250 points. And if you look at the individual counters as well, from the frontline index, it's Britannia which is gaining the most on account of that commentary that we heard, talking about how there's a bit of a recovery when it comes to the rural market. So that's something to watch out for. Adani Enterprises ahead of its earnings is also in focus. So that stock high by almost 2.5%. Hindalco, IndusInd Bank, Eicher Motors are some of your other gainers. Hero MotoCorp reported an inline set of numbers and the commentary on the con call was also okay. They're talking about double-digit growth in the first 15 days of this festive season. Nonetheless, that stock is in the red, down about 1.5%, and Bajaj Auto 2 is in the reverse gear. We're looking at India VIX as well. That's seen a bit of a slip. A CBOE VIX in the US had seen a sharp drop over the last couple of trading sessions. It's following back home as well. There's a bit of a slip as far as India VIX is concerned. And in individual counters, you have names like REC, PFC, Power India, Delta Corp, Vodafone Idea. These are your big gainers. And of course, result reactions galore.
Yeah, absolutely. Lots of earnings reactions coming in there. So let's start off with whether or not Tata Steel has seen any recovery or not, much like, the rest of the market. Actually, the stock did not even fall as much to start off trade with, something that the street perhaps was already anticipating. Tata Steel has actually seen a marked recovery of about 1.25%. That said, let's check in on what Tata Motors, Adani Enterprises are up to ahead of their numbers later today. Both those stocks will come up for you on your screens. In fact, Adani Enterprises is one of the top movers on the index right now, 2.5% higher. Tata Motors as well will just come up for you on your screens next. Actually, if you look at it sectorally, it's the big boys like an HDFC Bank, Bajaj Finance, which are lying absolutely flat in trade. And then Bajaj Auto and Hero MotoCorp, which haven't quite performed. Even though the earnings from Hero MotoCorp were impressive, that's not quite been the case when it comes to their October sales. And maybe that is what is disappointing the street. 1.5% lower for Hero MotoCorp as we speak right now. Karnataka Bank, and that stock is seeing a huge tanking, while the NII has come in higher by 2.5%. I don't think the PAT performance has really matched up to the street. And given the kind of positioning that you had amidst the banking pack, and especially Karnataka Bank, some of these smaller banks, remember, had done very well, and the market was anticipating that that's where you would generate a higher alpha, which is why I guess the bigger disappointment playing out on Karnataka Bank right now, which is currently lower by a good 7%. But let's welcome on board Naresh Mirani. We've got him joining in on the show right now. Naresh, hi, afternoon. Good to have you on board as always. The recovery stays, although we've had a little bit of chop and churn intraday, but at 19,200 on the futures, what's next?
So a decent recovery on the index as well as on the small cap index. We are seeing a 1% tick. So the breadth is good today. So overall, we go and test that 19,300 mark. That remains the crucial level. So for now, 19,000 becomes a base for the near term and 19,300. So once we go towards 19,300, we need to look at reducing positions over there. And if we start breaking 19,000, that is where, say, a reversal could come on the downside. But if you look at the broader market, stock-specific action is much better. The small cap index has recovered well. The mid cap index has also seen a good recovery. So time to be more stock-specific and relatively trade on lower size till the time we are below the 19,300.
So that's a take coming in on the Nifty. Separately, in terms of the result reactions, as we were talking about, it's JK Tyre, it's Syrma SGS. All of these counters are in focus, and GMDC as well, down about almost 7-8%. In fact, we spoke with all of these managements, JK Tyre, Syrma SGS, GMDC. So let's listen in what they're saying about the outlook, because of course, this quarter, for instance, JK Tyre margin improvement has been solid, but whether they continue that or not. On the flip side, for Syrma SGS, the margin performance was weak, but they're hopeful of an 11% mark by the end of the year. Listen into what the management's told us.
So as far as specialty sales in the current quarter is that about $240 million. We have done about 19.3% growth over the corresponding quarter previous year. And as of now, in H1, if you look at our sales are about 471 million, again growing about 20.2% over the corresponding H1 of previous year. Full year last year, we did about $871 million in specialty business. And all our key products, Ilumya, Sequa, Winlevi, are contributing to this growth.
So we're very bullish and confident of growing at a pace higher than the industry. Working capital is under control. Margins are the only area which we have been sort of lagging in recovering. The other two legs which we had set out, they are on track. And so I expect in the coming quarters, this would also improve.
Quarter one, we saw some recovery, and quarter two has been even better as compared to quarter one for exports. And our consolidated exports, both India operations as well as Mexico operations put together, there has been a robust double-digit growth in quarter two as compared to quarter one. So last year, second half was a low 6 months period for exports. So we expect that this year, the second half of the fiscal should be definitely better than the previous year's second half. So we are very confident about this and we are looking forward to it. Definitely there would be the impact of the seasonal demand, the holidays. Quarter three definitely is not a very robust quarter for exports. There is a year-end change. But quarter four going forward should again be quite good for exports.
Right, Jay Thakkar as well joins in on the show to talk about what he's making of the market right now. Jay, hi, afternoon. Good to have you in the show as always. Excuse me. You know, just a couple of buzzers that you can't help but notice. REC first, the surge that the stock has seen. And the other one being Idea, which has been clocking a fresh 52-week high on a daily basis.
Very good afternoon to you, Aisha. Definitely, markets are bouncing back, and I expect market to bounce back at least till the levels of say 19,200, 19,250 on the upside till 18,950, 19,000 levels are held on a closing basis. Markets are likely to be trading with a positive bias, so it will remain positive to sideways. Not much of a downside as of now, at least in the short term. Till 18,950 levels are held. But then yes, Idea is once a stock wherein we are seeing good long build up in this about the levels of 12, 12 and a half. So I think till 12 levels are held on Idea, the overall bias out there will be positive at least in the short to medium term. And I expect in this kind of rally or with this kind of a momentum, it's likely to take off its previous highs of 16, 16 and a half. So if you ask me about the risk reward is quite well or quite good in Idea. And REC, PFC both have bounced back quite well. It's seen that the stocks will see some profit booking as the momentum had actually weakened. But the kind of price action which we have seen today with an increase in volumes, clear long build-up on derivatives front, I believe that now 290 levels on REC will act as a very crucial support, and the rally continues on the upside at least until the levels of 325, 330 zones.
For REC, there's a fundamental reason as well. The earnings were strong. Disbursement growth is something that the street really liked. But what came in as a bit of a surprise was the credit cost, because there was some reversal that happened in terms of provision to the tune of around 760 crore thereabouts. And that really supported the profit boost that the company reported. Not just that, going forward as well, the management is quite hopeful that they could turn around almost 5 or 6 stressed assets with a book value of almost 2,500 crore rupees. And that is something which will make the credit cost for entire FY24 perhaps on the negative side, which could be another boost in terms of the earnings as well. The brokerages are quite positive. In fact, CLSA has actually upgraded the price all the way to above 300 versus 260 that they had earlier, and the other brokerages are also quite positive. My colleague Ankur actually caught up with the management of REC, listening to what they had to say regarding the provisions and the reversals and collections that they're anticipating.
We are also targeting the good asset quality. In addition to that, we are targeting that our NPAs should become zero by the year 2025.
Now, this is something being net zero by FY25. You have to take efforts from quarter on quarter, and as you mentioned, by 7 quarters consecutively, there is no fresh NPA. What is the strategy that is working, and what is the target for current year per se? How are you pursuing that?
Yeah. As of today, we are having 19 stressed assets, for which we already made provisioning of about 70%. Out of this 9 assets we are planning to resolve in the current financial year. 4 projects we are at the verge of resolving, and another 5 projects will be able to resolve in the current financial year itself. Remaining 10 projects are also at different stages of resolution, and we are 100% confident that we'll be able to resolve all these assets by the year 2025.
Right. Just looking at a couple of other buzzers in trade, while of course REC is one of the top movers today, what's actually lagging is, besides HDFC Bank, Bajaj Finance, which aren't quite participating in this market rebound, it's Hero MotoCorp, Bajaj Auto, which are a bit of a drag. We already highlight the reasons why. But Naresh, if I could just get you in on the charts of these two-wheelers, Hero Moto and Bajaj.
Leader in terms of outperformance. The stock, after breaking out above that 4,300 mark, has been in a strong uptrend. It's just that after such a rally, the risk reward is not great, but the trend is still positive. Trading stop loss will be below 5,100. So trend looks positive. Hero MotoCorp, on the other hand, continues to face resistance around that 30 to 50 mark, which is where it topped out 3 times over the last 4 months. And on the lower end, 2,950, 3,000 remains a support. So we are still stuck in this range. Closer to the lower end of the range, it's still a buy. And eventually, I would expect it to break out above the 30 to 50 mark and head up higher. So as a risk reward trade on the current dip, Hero MotoCorp looks like a good buy.
Naresh, for that. Hold that thought. We also have the management of Karnataka Bank joining us. Mr. Sri Krishnan H, MD and CEO, is with us on the show. Hi, thank you so much for making time and speaking with us. First up, I was just looking at your profitability. That has slipped almost 20% on a year-on-year basis, down to 330 crores. And even the NII is just up around 2.5% on a year-on-year basis. What explains that, sir?
So on a half-yearly basis, actually 700 crores is the all-time high for the bank. So it is not something that, it is by any standard low. That's first thing. Second is NII is being measured in 2 parts. One is that, there is a growth in the advances figure, which is substantial, which you would have seen. So the growth has actually hit about 18 to 19% now. We have grown over 7 to 8,000 crores for this quarter alone. Now, this is a very significant jump. So obviously, while we are acquiring new clients and acquiring new advances on the asset side, it is also a function of the price and also supplementary liabilities. So this is the normal phase of growth that every bank goes through. So this is no aberration really, and this is something which is very steady state growth as planned. And there are 2 other parameters which one has to see from an overall earnings perspective. One is a decrease in net NPA, and last is that overall our CD ratio has increased substantially, because we used to be earlier in the 60s and now we have actually hit a 73, which means that we are stretching our book. And we are also happy to announce that the capital raise that we had announced, we have allotted the shares and the money is in now. So the next quarter onwards, we have more headroom on that front.
Taken. But, I just wanted to follow up. You did talk about the H1 performance versus the H2 performance, but I just want to understand the incremental performance here, because even if I look at it sequentially, the profit has actually declined Q on Q. I think there is an improvement in the credit cost. Despite that, the profit has declined, and even the pre-provisioning operating profit is down. NIM has come up. What I'm trying to understand from you is, what's the sustainable number going forward? Was Q1 an aberration and this is what we should expect?
Not really, because one of the aberrations this quarter has been the treasury, which every bank in the country and perhaps in the world has faced because of the debt market, the performance in the country. So because of multiple reasons, we have had a treasury depreciation higher amount this quarter, and that explains actually the difference. But on an organic basis, operating profit and overall NII, actually we have been quite healthy. There is no reason to worry about this.
Krishnan, if you could just highlight a little bit about how the asset quality has been, because while I see there is a little bit of a dip coming in on the gross level, and where do you see pressures coming in, and would that then translate to higher provisioning too?
Not really, because actually both on the gross as well as on the net, we have decreased it. In fact, on the net, we have decreased it from 1.43 to 1.36%. So the collections have been good. And even on an increased book on the gross basis, this is not actually in any way correspondingly been increased. So which means that, we are intact as far as the overall health of the book is concerned. And NIM is also protected. That's one part that I wanted to let you know. While this is essentially only one abnormal event which has happened, which is the treasury part, and that's true of every bank. But I guess that as and when the book picks up, the market picks up on the debt side, then we'll be back to steady state even on the treasury side. But the growth in the book has adequately or more than compensated for whatever otherwise we have lost. So the overall H1 number, which is including 2 quarters, we are on a steady state 700, and this is actually an all-time high for the bank.
I want to talk about, the recent fundraise that you announced, 800 crore rupees. How is it that you are going to be deploying your funds?
So there are 3 parts to this. One is that, this is essentially capital for growth. That is for investment into technology, into the digital side of the bank, which we are setting up. The second part is that there is a tier 2, which is due for a call option. We have got the RBI approval for making a call that's about 400 crores, and that would be done mid-November. And there is also a subsequent capital raise, because the total approved capital raise by the board is 1,500 crores. Out of that, we have done 800. And which means that the 700 we'll have to do a follow-up. And we also do have a tier 2 second redemption, which is due in February. So which means that various capital actions that have been planned, the first strategy has been executed, and we will continue with that strategy. And this is actually going to contribute a lot into the bottom line also, because the retirement of funds at 400 crores is actually at 12%. And that is something that will significantly add in the subsequent quarter, which will be Q3.
Couple of follow-ups. I wanted hygiene data in terms of your slippages and recovery this quarter, if you can help me with that number. And you stick with your guidance of NIM of around 3.3 to 3.7% for the entire year?
Absolutely. And we are at 3.58 right now. And we continue to maintain that guidance of 3.5 to 3.7. On the slippages, actually, it's been 0.52%. On the PCR, that's a very interesting number. We are at an all-time high of about 83%. So, which again, shows the market that we are adequately covered. And this is including the technical write-offs, of course. But having said that, we have adequate capital now. And our capital adequacy has gone up, including the 800 crore raise, as well as the tier 2 bond that will witness an outflow right now.
Sure.
We actually would be much in excess of the stipulated requirement of over 18%.
Okay, point taken. So the asset quality is looking better and of course well funded for now. Thank you, Mr. Srikrishnan, for making time and speaking with us, and all the best for the coming quarters. In fact, on that note, we are taking a short breather on the show. Don't go anywhere. When we come back, we discuss the technicals of the market and the fundamentals with the guests on the show.
Back with closing trades right here on ET Now. Adani Enterprises numbers for you on your screens. 228 crore rupees is what they've delivered. I think what's going to be more pertinent is going to be the management commentary in terms of where the business is headed next. But that's the stock in trade for you. It's seen a sharp, sudden drop. Remember, just a short while back, ahead of the numbers, it was actually one of the top movers in the index, was holding up 3.5%. And now you're seeing a big crackdown coming in. About 0.5% is where it's currently latching on to its gains. But let's welcome on board Sunil Subramaniam and find out what he's making of the market right now. Sunil, hi, afternoon. Good to have you on the show. The Fed policy done with. Clearly, global markets are breathing a sigh of relief, as is India as well. But does the recovery look sustainable to you on the back of all the data points that we've seen so far?
Well, the recovery would sustain if the Fed's commentary on the future outlook comes through, right? So I think that essentially future data points would determine whether this could come through. I think, and the other thing is that the Israel-Hamas conflict hasn't led to that kind of volatility, which otherwise it should have, because oil prices have been reasonably stable, though initial expectation was that oil would go up because of the conflict and the fact that Iran, which is a key exporter of oil, is a part of the conflict. But that hasn't happened because I think market is absorbed because Iran wasn't a hazard to supply. So any anticipated supply, probably there may be hitches. The other thing is, of course, I would say is the fact that US is in talks with Venezuela to acquire oil. So if Venezuelan production comes into the market, that would again be a dampener for oil. So I think from India perspective, yes, the Fed announcement, which was read by the market as no rate hike in December, was obviously welcome, and equity markets don't like rate hikes. So absence of a rate hike would turn out to be a positive. But from India perspective, over and above that, it's the oil price trend which drives FII behavior into India. And so far, if you see over September and October, the 2 months, we've had 40,000 crores of FII outflows, purely, I would say, on the fear of oil rising. Now, most recent trends indicate that oil is stabilizing. So I would say that for the next few weeks, that's a greater trigger till the next Fed policy comes through in December. I think the oil price will be the greater trigger to watch for from an Indian FII flow perspective.
So that's about the setup right now. Adani Enterprises numbers and the revenue have actually dipped 11% on a year-on-year basis. The profitability is at around 673 crores, and that compares with 227 crore. That's because there was an exceptional loss, and that's impacting the number. I also want to highlight what's happening to Dabur, because that also just reported its earnings. If you look at the consumer care business, that's reported a decent growth. We are looking at a number of around 2,600 crores as far as consumer care goes. Food business is 540 crores versus 500 crore earlier. So these are the two big numbers really to watch out for. Overall revenue has also come in at 3,200 crores, and the profitability now stands at 507 crores versus 490 crore last year. So Dabur India is also seeing a bit of a perk up versus what we saw. In fact, Sunil, what's your take on the FMCG companies, whether it was an HUL, ITC, Britannia for that matter? It's of course not a blowout number, but there are signs of recovery when it comes to the rural market, and urban India as it is was doing well. What's your take on the FMCG and consumption basket?
Well, I think the current quarter's numbers have not lived up to the expectations, but you're right that the commentary from them has been positive in terms of reviving rural demand. And I would attribute this to the fact that in the period that you saw vegetable prices shoot up and all of that, obviously those higher prices translate into higher rural income. So I think that's one good thing. The second aspect here is that also the coming season is an election season, and generally governments in power and the opposition both tend to spend a lot of money into the market during the election run-up. So obviously FMCG consumer goods would get a spillover of that kind of a demand. So I do expect the demand story around the consumer goods basket to remain fairly healthy right up to the parliamentary election. So that I think augurs well. So though the numbers have not been great, I would still say that it's a good point to accumulate consumer stocks at this point in time, given the outlook for the next 6 months.
To see what the volume growth as well is going to be from Dabur, considering the revenues look a little better. 3203 crore rupees is what they've delivered, and which is why I think you're seeing the spike up in the stock price right now. But it's imperative to really gauge from the management whether the rural end of the market is actually seeing a pickup or not, because that slowdown is the one, remember, which hampered some of the rural facing FMCG players, Dabur, Marico and the likes. But that said, just taking stock of what else is holding out in the market, metals are seeing a bit of a rebound. So the banking names are looking quite okay. There's, of course, Tata Motors ahead of its numbers, which is holding out better as well. But Sunil, where do you actually see scope for further gains within the auto pack? Because it was a bit of a disappointing set from Tata Motors, the CV segment, from Hero MotoCorp when it came to the October sales. But earnings-wise, we're still awaiting Tata Motors numbers today. Earnings-wise, they've delivered on all counts.
Well, I think that in the auto pack, if you notice what's generally been happening over auto is that premiumization of auto is happening. So you have the 7 lakh plus cars in the personal, which are showing the demand, but not at the entry-level cars. Similarly, because of weak rural demand, scooters and motorcycle demand has been low, right? So I would say that given this, the festival season is ongoing, these quarter numbers don't reflect what will be the peak season for them, right? And if you look at, I was driving past Chennai towards the station, and there is this temple there, which is called as the New Vehicle Temple. Most people go there to, do a puja around the new vehicle, and it was jam-packed. So my own feeling is this festival season is going to see a turnaround in the entry-level auto segments like motorcycles, scooters, and entry-level cars. We're going to see a pickup, and next quarter's numbers will reflect that. So I'm not unduly pessimistic about the auto numbers. On the CV space that you said, there is a cyclicality element of looking at it as a YOY basis. Otherwise, the logistics and transportation in a growing capex cycle should see increasing demand. And I see that CV is actually on the verge of a breakout if you take a slightly medium-term outlook. So overall, I do remain reasonably confident around the auto pack. I think CV demand should bounce back in the next quarters. I see two-wheelers and motorcycles and all of those during the festival season picking up. So I think overall the consumption pack where auto is a part of the discretionary consumption, I see as looking good.
Okay, thanks Sunil. On that note, we'll let you go. Appreciate you making time and speaking with us. Naresh, in the meantime, comment on the charts of the earnings that we have seen in the last 10 minutes. Dabur, Cholamandalam as well as Adani Enterprises.
So Dabur has been sideways for the last almost 2 years now. The stock had peaked out around 510, 520 levels after the COVID initial rally. Then did see a rally to 660, but in the near term for the last 2 years, 500, 530 has been tested multiple times. So sideways out here, so no real view in terms of a bounce back. Then going to Adani Enterprises, that also came very close to a breakdown in terms of the last 6 months low. The last 6 month low is between 2150, 2200, and is again testing those levels. So if it breaks that 2150 mark, then it becomes a lot more weaker. So for now, I will avoid here as well.
Investment in finance company?
Chola, yeah. Chola, on the other hand, has been a strong performer and now is getting sideways after this huge leg of outperformance over the last 6 months. So the stock has gone up from 750 levels to almost 1250 and now consolidating. I would expect a new range between 1120 to 1220 for the near term.
Point taken. In fact, on that note, let's take some closing trade ideas as well from our technical experts, Naresh.
Buy on GAIL India, the stock has corrected from 130.33 levels to 117. Post numbers did see some volatility for the last 3-4 sessions, finally crossing a 4-day high above 121, 121.50. So it looks like a recovery towards 130 in the short term.
Closing ideas that you may have spotted?
Well, as far as the closing ideas are concerned, I have a buy recommendation on IndusInd Bank futures. It's trading around the levels of 1469, 1470, and the kind of long build-up which we are seeing out there on IndusInd Bank, I think is likely to reach towards the levels of 1500 to 1520. On the downside, one can place a stop loss at 1440. So IndusInd Bank is providing a good risk reward right now. The second buy recommendation would be on Reliance Industries. The stock is looking good from the short covering point of view. A bounce back out here can't be ruled out with the kind of positive divergence which we are seeing on the daily and the hourly charts. The stock is likely to reach towards the levels of 2360 to 2380. So Reliance can be bought at the current market price with a stop loss of 2290.
Okay, those are some of the closing ideas coming in. Although HDFC Bank, that's flat today. There's Bajaj Finance as well, which is marginally soft right now. Hero Murka Bajaj, as we've been flagging out, they're the weak links definitely. Even ICICI Bank is not quite moving with the rest of the market. It's actually metals, surprisingly, which is seeing a big turnaround today. Naresh, what is the view on metals as a pack?
So selective places where we could see a short-term bottom in place. So for example, Tata Steel has corrected from 133, 135 levels to 115, 118. We've seen a little bit of a dip in US 10-year, etc. So looks like a bounce back towards 125 on Tata Steel. The interesting name is Jindal Steel, which has corrected in this move, corrected from 700, 720 down to almost 570 to 590 band. So that could be a contra trade wherein it could again slowly make a bounce back towards 640 levels. So a contra trade here is to go long into Jindal Steel.
That point is taken, but we're just discussing the numbers of Dabur, which look largely in line with expectations. But let's decode more on that. We have Ankush Jain, the CFO from Dabur India, joining us on the show. Ankush, hi, good to have you. I understand that the volume figure for the India business for the FMCG volume growth stands at just 3%, while the international business continues to report double-digit growth of around 23-24% in terms of constant currency. This 3% volume growth, would you call this subpar?
Yeah, good afternoon, everyone. So first of all, we need to, while the volume what we are seeing is 3%, but you have to see it also in the context of healthcare and HPC, where volume growth was almost 5%. And because the beverages this quarter declined, mainly because of unseasonal rain and uneven rain distribution, primarily in July and part of August, the overall volumes got impacted. But by and large, if I exclude this, it was 5%. And also it was, if you see even the international business, as you said rightly, it is 22% growth, and growth has been broad-based primarily in international markets, where MENA grew by 18 to 20%. Then Egypt, in local currency, it grew by 35%, and hobby or Turkey business grew by 78%. So I think while we are seeing volume of 3%, but overall, value of 7.3% is a CAGR of near double digits over 4 years. And having said that, we continue to gain market share in 90% of our product portfolio, whether it was Chyawanprash, honey, Amla hair oil, toothpaste, Odonil air fresheners, Odomos. We gained market shares across 90% of the portfolio, which means that the brand strength, our execution, our drive, our reach was very focused, and it was well broad-based within India as well.
Ankush, could you get a little bit deeper? I mean, I know you flagged off some of the components of the food business segment, but the fact that your revenues have seen an uptick of about almost 51%. Sorry, I stand corrected. You'll have to give me that number. Yeah, your figure for your food business revenue stands at about 540 odd crore rupees versus a comparable of 499. Where do you see the business actually headed, and how some of the individual brands have actually performed for you?
In terms of food business, our homemade masala, our basha masala, and all these actually grew by 40%. So we are seeing not only market share gains, but our huge potential in terms of food business. Food business annually, we would target around 500 crores in 2 to 3 years, and we are committed to that, and we will be driving it very aggressively. While beverages was a bit of soft, but even beverages was 14 to 15% CAGR over last 5 years. While in nectars or juices categories, we gained 1,000 bips market share, whooping 1,000 bips. So I think we are very optimistic on foods and beverages put together, and they will be our growth drivers in the future.
The other thing which the street has been quite concerned about, and we've also had interactions with your company around that, has been how the rural end of the market is actually shaping up. What is it that you can tell us, whether or not the demand, or rather the subdued demand, has now bottomed out there?
Yeah. While rural, it was slightly slower than what we expected, but there are definitely green shoots. If you see last 3 quarters, at least it has moved into positive territory. The syndicated data where we operate, in quarter 1, January to March quarter was flattish, then it moved to 4% growth, and now this quarter it was 6.2. So while the gradual recovery is there, but still I think it is lower than urban, and the gap between urban and rural is reducing. What got impacted in rural, 2-3 things. High inflation, there will be definitely a lag impact, which impacted the disposable incomes at the rural end. Secondly, also uneven rains in early part of summer that impacted. But having said that, there are green shoots possibly in H2. And why do we say so? Because the moderation of inflation will have a lag impact, which will increase the disposable incomes of the rural consumers, point number 1. Then also recent increases of prices or MSP by the government will put more money in their hands. And thirdly, with election season coming, I think the government will roll out certain subsidies, or we expect the infrastructure to speed up. That will also benefit. Plus, I'm very confident that rural has been underpenetrated or under-indexed in most of the categories we operate. And there's no reason why the bridge between the urban and rural consumers should not come down. And they are also very aspirational. So it's only a matter of time. I think things have started improving. It's just a matter of time. While I think there was some delay in terms of recovery.
Sure, no, Ankush, but help us, crystal ball gaze here a bit in terms of when will we see that recovery? You're right now stuck at that low single-digit volume growth for the last quite a few quarters. When do we see at least it coming closer to 10% mark, if not double-digit? And even on margin front, a lot of raw material prices have cooled off, but the margin still continues to be around that 20.5% band. Should we expect a material improvement in the margins also from here on?
Yeah, so I'll first take the second question on the margin front. This quarter, if you see the operating margins, they have increased by 50 bips. And this is despite the fact that we had one of recurring cost. But also you will see it in the context that while our gross margins improved by 300 bips, but as we had committed earlier, we wanted to reinvest a significant part of it into brand building, into advertisement, into media promotions and all. And hence you would have seen our advertisement spend going up by 42%, which we think will drive long-term and sustainable growth. And even in few quarters to come, we will do that. We will do a judicious balancing between gross margin upside and the margin and the redeployment back into advertisement. But at the same time, we'll also give a gradual improvement in operating margin, because we feel that a long-term and a sustainable growth is imperative, which can also come if we redeploy significant part of the gross margin expansions, either in terms of media expansion or developing people capability, digital capabilities, and so on. And this is the right time, before it is too late and we get into another inflationary cycle. But having said that, at an yearly level, we see almost 50 to 70 bips of net operating margin increment from last year, even after redeploying into various capability and brand building efforts.
Okay, point taken. On that note, Ankush, we'll let you go. Appreciate you joining us on the show. In fact, on that note, let us slip into a very short break as well, because when we come back, we'll track the last 20 minutes of the trading session. Welcome back. Well, talking about earnings reaction, and that is what we are seeing on Suzlon as well. The net income actually jumped up substantially, 78% on a year-on-year basis. The profitability has come in at 102 crores, and that's the reason you are seeing the vertical move on that stock. So, Suzlon Energy definitely seeing quite a big move right now. LT Foods is the other one, which is high by around 12%. Triveni Turbine also reported a solid set of numbers yesterday. In the morning, it hadn't seen that much of perk up, but now Street is kind of factoring in that good performance, and we are seeing the build up happening on Triveni Turbine as well. And Vodafone Idea, that continues to be in its own trajectory. In fact, if you look at the week gone by, that stock has managed to gain almost 20-25%. In fact, that's the question I want to pose to Rudramurty as well, who's joining us on the show. Vodafone Idea, what do you make of this breakout? And the other one is Macrotech Developers. No new news flow as such today, Rudramurty, but Lodha Industries is seeing quite a bit of action.
See, first of all, a word on Idea. For last 4 trading sessions, this stock has definitely shown positive price action with volume. So for me, this is a breakout which will stay. So the breakout which has happened now at around 12 rupee 50 paise will continue. And we have also seen yesterday a close about 12 rupee 50 paise. So this stock is headed upwards, can move towards levels of around 17 to 20 range. So I will keep a stop loss of 12 rupees and continue holding if I have Vodafone, or even buy at current level, looking at targets of 17 to 20 rupees with a stop loss of 12. And when it comes to Lodha, again, this stock having done its sideways consolidation for a long time, today it is giving breakout, and I have to see whether will it close above those crucial levels of around 840, 850 zone. Yes, based on the current market price, I presume the close will definitely be above that breakout zone of around 830. So I will look at freshly even buying Lodha at current market price. I will keep a stop loss of 800, look at targets of around 900 initially, and even 4-digit number, that is 1000 to come soon on Lodha. So Lodha and Idea both looks very positive, and the breakout what it is giving will be stayed, and market will definitely continue liking these stocks like Lodha as well as Idea.
That's the take coming in on some of the buzzing stocks in trade. Let's take a look at what Tata Motors as well is up to, considering the Q2 numbers are anticipated and they should be out just within minutes of the market close. We are expecting lower raw material costs, some of the cost control measures as well that they put in place to actually aid the performance and their margins this time around. So, we're expecting sales to see a bit of a downtick, largely pretty flat actually on a year-on-year basis, and an uptick of about 7.5% on a year-on-year basis for Tata Motors. The India business performance could be a mixed bag because remember, even for the last month gone by, you did see the CV business fall a little short of expectations. Having said that, the CV business is going to see a growth of about 3.5% on a year-on-year basis, and the passenger vehicle volumes, they are expected to see a fall of about 3%. That is what we're penciling in from Tata Motors. So let's see which way the business heads. Of course, some of the key parameters are going to be JLR, what the production outlook is going forward, what's the launch pipeline for the passenger vehicle business, and of course, festive sales, whether they can make up for what we're going to hear in Q3. But Interglobe Aviation as well is all due to report its numbers. Let me take it across to Samit and get in more details.
Well, on sequential basis, if you say, it is expected to be a muted set of numbers from Indigo, but that is also because Q2 is generally seasonally weak for airline companies. On sequential basis, revenues are expected to be lower by around 12%. EBITDA adjusted for forex gains or losses is expected to drop by nearly 69%. Net loss, in fact, from a supernormal profit reported by the company in the previous quarter of more than 3,000 crore rupees. In this quarter, they are expected to report a loss of close to 660 crore rupees, and this clearly shows how inconsistent an airline company's earnings could be. Now, yields which measure the average fare per passenger per kilometer, that is also expected to drop around 13% on a sequential basis. Now, given the fact that it is a seasonally weak quarter, we are going to see lower air traffic, lower yields and lower passenger load factor, which is also called as capacity utilization. This, coupled with higher oil prices, are expected to weigh on Indigo's earning in the second quarter. Now, Indigo also ran multiple discounts and offered to gain or protect their market share, which also could be weighing on the Indigo's earning in the second quarter. Now, more than the earnings, the key important things to watch out for from Indigo earnings or their conference call tomorrow post-market would be their capacity guidance for FY25. Along with this, what are the engine issues that they are facing, what is the additional cost that they are incurring due to change in their leasing model, and also how has been the demand and ticket prices in the festive season would be important to watch from Indigo earnings.
Okay, that's the take coming in on Interglobe Aviation and what to anticipate there. Gurmeet Chadha as well joins in on the show right now. Gurmeet, hi, afternoon. Good to have you on the show. Slew of earnings, and that's where all of our attention has been. Anything that's got your attention?
I think if you move IT and chemicals, I think it's been a pretty good earnings season. In fact, even including them, I think the median earnings growth has been upwards of 18%, at least as far as the larger universe we track, which also points to a decent growth momentum in the economy. The governor also highlighted that Q2 GDP could surprise positively. I think the consumption theme is clearly domestic-oriented consumption theme is clearly standing out. Capital goods, I think L&T was a standout result. I think what tells you that not only the domestic investment cycle is upticking, the Middle East is now meaningfully contributing as oil inches higher and the countries start investing in renewable energy. Also, it's leading to a lot of demand overall because if you see, India also needs like 30-40 gigawatts of renewable energy. So demand for transformers, insulators, switch gears, cables, actually, it has a huge multiplier impact. So that's a space we are watching out. I think that's standing out, and I think the old economy stocks should do well. Also, I think cement numbers are showing we are seeing volume uptick after a long time. We saw the Ambuja commentary. We'll wait for some more results as they come in. And I think with a very long festive season and a wedding season and with World Cup and state elections, I would like to also monitor some of the consumer names as well as the rural-facing names.
And also just taking a look at Karnataka Bank, we are speaking with the management because the numbers definitely did not look very impressive on a year-on-year or a quarter-on-quarter basis. They did maintain that they are talking about 18 to 19% kind of growth in advances, but the stock is actually not believing that right now, down about 7.5%. In fact, Gurmeet, for the entire PSU basket, what's your take? Do you think the peak is behind, or there is a lot more legs to this rally?
No, I would agree that probably a large part of it could be in the price. So you got to be more selective here, especially with banks, because you will see some pressure on NIMs. There is some concern on unsecured lending by RBI, and in PSU banks, you can have some negative surprises, which can rekindle, the previous experience people have. So I think, if given a choice, I would prefer to be with SBI, Bank of Baroda. Maybe if I want to go a notch down, maybe Canara Bank. On defense, I still think that the momentum is pretty strong. But again, there you got to be selective because stocks have just run up purely basis order books. I think execution would be the key. So defense space excites us. I think HL looks really, very good. Railway capex again as a theme, I think has a lot of legs. We are seeing very, very strong demand for Vande Bharat coaches, for wagons, as well as for the wheels as well. So Titagar is something we track. So little bit selective here. I think the broader rally probably would be behind us, but selectively, I think some of them will still do well.
Quite interesting. Since you've been talking about the entire consumption and the festive cheer right now, Bajaj Auto, TVS, most of them actually, barring a few odd CV plays like in Ashok Leyland or Tata Motors, the CV business, and an inline set from Hero MotoCorp, largely all of them have, shown very robust performance, Gurmeet, in the October sales data. But where is it that you would have confidence of buying afresh?
So I agree with you. I think the commentary from TVS and Bajaj has been pretty good for festive season. I would probably wait for Dhanteras. I think that's a very, very key day in terms of uptake, and see how it pans out. And I think you will see with increase in MSP prices, spending picking up with state elections approaching, I think we'll have some impact there. So TVS has done up quite a bit. But I think what we have impressed is the way they have done well in the 125cc plus segment. So if you see, it's the same trend which is playing on in passenger vehicles, where two-thirds of the cars are SUVs and MUVs. Similarly, in two-wheelers now, 65% is upwards of 125cc. And that's where Hero is still facing challenge because the new launches haven't clearly lived up to the hype. Both TVS and Bajaj continue to do well. TVS, especially with Rider as well as Apache at the higher end, higher CC, continues to do well. Even on iQ, which is their EV one, continues to do well. They're already talking about 20,000-30,000 units now on a monthly basis. The margins are back in double digit, which is good. And we like some of the ancillaries which in two-wheelers. We like Sandhar Technologies, which is the leader in locks as well as fabrications and cabins for off-highway. Sandhar also has diversified from just being a single product, single supplier, which was Hero, to adding more labels, especially TVS now, and Honda HMSI, which is the Honda scooter company, and they are getting into more value-added segments, also developing a nice EV portfolio as well in DC-DC chargers as well as other battery management solutions.
Taken. Rudramurty, what's your take on the charts of Delta Corp as well as BHEL? Both of them have seen suddenly good price volume action.
See, when it comes to Delta Corp, for me, it is in that trading band of around, on the higher side, there is selling coming at around 145 to 150 zone. And surely there is support for this stock emerging at around 125 zones. So it is just in between. So I will be a buyer closer to 125 for trading, and on the higher end at around 145, 150, I will be a seller. So a big move on Delta Corp can come either on the upside or on the downside once this consolidation range is broken out. So on the higher side, it has to break at least 150, and on the lower side, unless this stock breaks decisively 125 range, it will remain sideways. So as a trader, I will have no positions or no call right now on Delta Corp unless it breaks the range. But when it comes to BHEL, yes, this stock is definitely showing signs of strength. It is now going above its 20-day moving average, which was placed at around 125, and today it is closing above those levels. So I will surely be a buyer in BHEL, and this stock should now cross 133 zone, which is a intermediary resistance which it has. Once it crosses these levels of around 133, 135, yes, stock can go towards those levels of around 150. So I will be a buyer at BHEL at current market price. and I will keep a strict stop loss of 124 and looking at targets of around 133 first to come and then to those levels of 145 to 150. So BHEL buy, Delta Corp avoid.
Let me just get in a quick VTST trade as well. Rudramurty, very quickly, what's the trade that you're recommending?
Yeah, Vedanta has shown clear signs of reversal. So I will be a buyer in Vedanta, looking at targets of 235 with a stop loss of 226. Tata Communication also looks very strong to me. So I will be a buyer looking at targets of 1,750 with a stop loss of 1,695.
Let's just check in on what the latest subscription figures for Mamaearth is, because it's already subscribed 2.5 times. Gurmeet, curious to know whether any of these new IPOs have interested you or you've been subscriber to?
Not keen on this one, largely because of valuations. I think I'd like to see how the uptake in bottom line happens. I think one new age I've been now tracking is Zomato. I think would like to see, maybe probably wait for another quarter before I really take the plunge. So one thing I need to monitor is, can they sustain the take rates? And as I said, with festivities and World Cup and this being a strong consumption season, we would like to see the uptake in the overall GMV as well. And also the progress on Blinkit. They did mention Blinkit also turning a bit positive 2 quarters from now. So that's something we are tracking. Also, it's almost a settled duopoly now with only Zomato and Swiggy. So I think the entry barrier would be higher. But as I said, we need to watch out for ONDC, the threat on the take rates. I'm eagerly awaiting Tata Technology. I think that's one I really look forward to. I think it would be a very interesting play. And I think post the price band which we are having in the market, I think there is some reduction in the valuations also at which was trading in the private market. And in general, we've been lucky with this, the EV technology adoption, so OPEX spending on ERD by top OEMs. We've been very lucky with KPIT Technologies, upping the guidance when all ITM companies have been struggling. So we really like that space.
KPIT Technologies was definitely the outlier, because this morning, of course, we saw that guidance cut from Cognizant as well. This was one of the only IT companies that actually increased their guidance this quarter. But separately, in terms of the other stocks that we are watching out for on the gaining side, it continues to be similar name, to be honest, the same power stocks as well as Raymond, which is seeing a bit of a spike. But within realty itself, Gurmeet, what's your take? A lot of momentum, but again, the cycle has already been on the upside for the last 2 years. And given the fact all the cycles are getting shorter, whether it's a bull cycle or a bear cycle, how long do you expect this real estate boom to really continue?
No, I agree with you partially. I think the cycles are really shortened. I think the impact of RERA is now getting visible on a lot of balance sheet of some of these companies. And you are seeing now a lot of consolidation in real estate. It still is geography specific. But if you see even in North, for example, where I come from, it's largely been 4 or 5 developers versus 15, 20 we had with the new compliance guidelines in NCR as well. So I think we like DLF. I think their luxury portfolio continues to surprise. People are willing to pay 50, 60, 70 crores for apartments in Gurgaon. There's good launches in the mid luxury and affluent segment as well. The office and retail portfolio continues to do well. So there's nice stability on the cash flows and significant debt reduction. I think that should give some financial leverage. But as I said, the larger play would still be home improvement. There is some correction in some of the home improvement names recently. With the correction, we saw mid and small cap space. So we like, this cables and wires name, sanitary ware, tile makers, plywoods, also cement. I think after a long time, I'm seeing volume growth back and some price hikes in selected geographies.
Okay, Gurmeet, always pleasure speaking with you. Thanks as always for taking the time out and joining in today. Let's just take stock of what the market is closing in at. It got a little wobbly today, intraday at least, but we managed to close out in the green. Of course, there's been a whole host of earnings reactions that have also trickled in, but we're largely up about 150 points. 1% higher for the Nifty futures, scaled it above that 19,200 print there. Britannia, Hindalco, Innocent Bank, Apollo Hospitals, Tata Steel, as surprising as it may be after those disappointing numbers. Eicher Motors, Tata Motors ahead of its numbers, Axis, Sun Pharma, Infosys have all contributed to the market move today. Within the broader end of the market as well, wherein the breadth has actually closed well in favor of the advances. You couldn't have taken your eyes off from what REC and PFC did. Both those stocks held out by nearly 7 and 6.5% apiece. Delta Corp, that's been the surprise mover, an 8% surge coming in on that stock today. And then Idea, of course, which has consecutively been clocking fresh 52-week highs, that too closed in higher by 7.5%. BHL too, strong move there, 5.6% higher. But on that note, we're going to wind it up right here on this edition of Closing Trades. We'll see you again tomorrow morning with all the market action.